In the week ending January 9, 2026, U.S. markets showcased a robust start to the year, with the Dow Jones plus 2%, S&P 500 plus 1.5%, and NASDAQ plus 2%, all posting solid gains. Performance was notably broad-based, moving beyond the 2025 tech-heavy concentration. U.S. sector movement, Jan 5 to 9, 2026. 9 of the 11 S&P 500 sectors finished in the green. Energy led the pack, rising 3.2% as supply concerns in Venezuela and Russia pushed crude prices higher. Consumer staples, plus 2.3%, and consumer discretionary, plus 1.7%, followed, buoyed by resilient holiday spending data and easing tariff concerns. Defense saw a specific late-week rally following a proposed $1.5 trillion military budget for 2027. Technology was the primary laggard, receding 1.5% midweek as high valuations triggered profit-taking in megacaps like Nvidia and Broadcom, though it recovered partially by Friday. Here at the Stock Market Performance playlist is this week's Stock Terminology Learner. Top investment frequently asked questions. Market sentiment. The animals. Bull market. A market that is trending upward. Think of a bull thrusting its horns up into the air. Bear market. A market where prices are falling, usually a drop of 20% or more. Think of a bear swiping its paws downward. Dead cat bounce. A temporary, brief recovery in stock prices after a severe drop, which is often followed by a further decline. Farm animals. Investor behaviors. Pig. Greedy. Takes high risks for quick gains. As the saying goes, bulls make money, bears make money, but pigs get slaughtered. Chicken. Fearful. Risk-averse investors who panic at the slightest dip or stay in safe low-return assets like bonds. Sheep. Follower. Has a herd mentality. They follow popular trends or hot tips without doing their own research. Global market conditions and predicted movers up. Condition and trends. Markets favor U.S. growth, UK stability, European stimulus, and Japan's governance-led inflation exiting bull run. Exchange. U.S. Microsoft. AI infrastructure spending remains a dominant, multi-billion-dollar growth driver. JPMorgan. Higher yields and strong credit demand boost early-year banking earnings. UK. Shell. Rising geopolitical tensions and supply constraints support sustained high margins. AstraZeneca. Defensive rotation and robust drug pipeline provide steady investor appeal. Europe. ASML. Rebound in global semiconductor demand fuels critical lithography equipment orders. LVMH. Resilient luxury demand and European fiscal stimulus improve consumer sentiment. Japan. Toyota. Corporate reforms and a weak yen enhance global export competitiveness. Fast retailing. Exceptional earnings and retail expansion drive momentum in Japanese equities. Anticipated news. Week of January 12th. U.S. inflation data, CPI/PPI. Tuesday's December CPI report is the week's focal point. Markets expect headline inflation to hold steady at 2.7%, which will dictate the Fed's rate cut trajectory. Bank earnings kickoff. Reporting begins for JPMorgan, Wells Fargo, and Citigroup, providing the first look at corporate health and consumer credit strength in 2026. European growth indicators. Germany and the UK will release GDP updates and industrial production data, crucial for gauging the impact of recent stimulus. Asian trade flow. China's trade balance and Japan's current account data will be scrutinized for the impact of shifting global protectionist policies. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the stock market.